Hi, welcome to St. Louis Community Credit Union. I'm Trina. Today we're going to talk about building a strong credit history. Before we get started, you have a responsibility. You need pen and paper. I'm going to give you whole lots of phone numbers. I'm going to give you some websites, and you have to write them down. Today we're going to learn who needs to build a good credit history and why. We're going to learn the significance of a credit report and score. We're going to learn how to establish credit if you don't have any. We're going to learn how to rebuild your credit if you've already messed it up. I'm going to give you some tips on how to use your credit wisely. We're going to go over some pitfalls that cost you plenty. And you're going to learn your rights and responsibilities. Now, why do you need to build good credit? You need to build good credit because it improves your image in the eyes of lenders. It gives you the ability to get loans. It gives you the ability to get an apartment. It gives you the ability to get lower insurance rates. It lets you get credit cards, and it even allows you to get a job. And it gives you lower interest rates on loans that you do get. So, who needs to build good credit? Everybody needs to build good credit. If you're a high school graduate, if you're a college student, if you're a young adult, if you're a recent immigrant, if you need to get back on track. And ladies in the audience, if you think you don't need to build good credit because everything's in your husband's name, you're wrong. Build your own credit report. So what's in your credit report? Everything about using your credit report. All of your identifying information. If I want to know anything about you, I'll just look at your credit report. It's got your name. It's got every name you've ever gone by. My maiden name, everything I've ever had is in my credit report. It's got my social security number. It's got date of birth, and I'd like to hide that one, but the date of birth is in there. It's got my address. It's got my employment history. It's got all of my creditors. It's got any bankruptcies, judgments, liens, and lawsuits. Not mine. I don't have those. And it's got inquiries that you initiate. That means that anytime you apply for a loan, it shows up on your credit report. Those offers you get in the mail, those are not on your credit report. So if all these things are on your credit report, who's looking at it? Lenders are looking at it. Anytime you want to apply for a loan, they look at your credit report. Anytime you want to move into a house or anytime you want to rent an apartment, the landlord looks at it. Potential employers look at your credit report. Now you might ask, why does an employer have the right to look at my credit report? Just look at it like this. If you're not taking care of your own business, how can you take care of somebody else's? Also, insurance companies are going to look at it. They're going to determine your insurance rate by your credit history. So if all these people are looking at your credit report, you probably want to look at it first so you know what to take care of. You can go to annualcreditreport.com and get a copy of your credit report. Or you can call them. Here's where you need that pen and paper. You can call them at 877-322-8228. Again, that's 877-322-8228. Or you can go to the big three credit bureaus yourself. You can go to Equifax. You can call them at 800-685-1111. Or you can call Experian at 888-397-3742. Or call TransUnion at 800-888-4213. Or you can come directly to the credit union and let us do a credit checkup. We'll give you a free copy of your credit report. When you get your free copy of your credit report, if you find there are errors, the law entitles you to correct your mistakes. To do that, what you do is you write the credit bureau. The credit bureau then has 30 days to investigate your findings. They'll notify you of any results, and they'll delete any inaccurate information. If you don't agree, you still have the right to write a dispute statement for your file. So why do you want to correct your mistakes? You need to correct your mistakes because the mistakes affect your credit score. And here's how your credit score works. The FICO score ranges from 300 to 850. 300 is the low side, 850 is the best you can have. The higher the number, the better. And remember, it changes over time depending on how you're paying your payments. So pay your payments on time. The score answers the question, how likely are you to repay your loan? Here's how the FICO score is made up. 35% of your score is determined by your credit history, whether or not you're paying people on time. 30% is determined by how much you owe your creditors. Do you owe a lot of people a lot of money? 15% is the length of your credit history. So please, make sure when you pay off all your credit cards, unless there's an annual fee being charged on that card, that you don't close the card out. 10% is your new credit, and 10% is the current use of credit, or the mix in your credit file. And now I'm going to give you some tips on how to build strong scores. First off, pay your bills on time. Remember, 35% of that score is determined by how you're paying your payments. And 30% is your credit utilization ratio. Now what that means is if you have 3 $1,000 cards and you need to be in debt $1,500, don't max one of them out at $1,000 and then put $500 on another card. Use $500 on each of the cards and keep the utilization down. Don't close all your old accounts. Don't open a flurry of new accounts. And please be logical. Don't co-sign for other people if they have bad credit. Now, if you haven't had a credit history yet, you need to start small. You first need to come to St. Louis Community and let us open your savings account. You need to put your utility bills in your own name, and you need to make sure you pay them on time. You can apply for a small loan or a line of credit. Make sure, again, you pay it on time. Remember, that's 35% of your score. You can get department store or gas cards as long as you pay those off monthly. Those are going to have really high interest rates, so you don't want to keep a balance on those. When you're first establishing credit, you might want to think about using a cosigner on your first account. Or you may want to get a car loan and put a down payment. Or come to the credit union and let us do a Credit Matters loan. And lastly, make sure that you go to places who report to the credit bureaus. There are still financial institutions out there that will give you a loan, but don't report your credit. So, if you've already developed your credit history and you've gotten in trouble and you've messed it up, because I know it happens, you have to rebuild it. Here are some ideas for rebuilding. First off, remember to order your free credit report. And where are you going to do that? Yeah, you can go to all the credit bureaus, but I recommend that you come to St. Louis Community and let us do a Credit Matters loan for you, or let us do a full credit checkup for you. Pay your bills on time, 35% of your score. Pay down your debt. Establish an emergency fund. Don't let a flat tire throw you out of whack that you can't afford to pay your payments. Don't let that $150 tire keep you from paying your bills on time. Apply for a small line of credit and pay it on time. Apply for a secured loan. Again, come to St. Louis Community and let us do a Credit Matters loan. And anytime you can, get automated bill pay or direct deposit, because you know those payments are going to happen on time. And if you need to, get help. You can come to St. Louis Community for help, or you can go to Balance. Balance is a free financial counseling service that's free to the members at St. Louis Community. So I'm going to give you some tips for using your credit wisely. Charge small amounts. Pay them on time. Pay your payments in full if possible. Don't get caught in the minimum payment trap. If you can't pay it in full, at least pay more than the minimum. Avoid maxing out your cards. Avoid late payments and over-the-limit fees. Those fees not only cost you money, it usually causes your interest rates to go up, and you don't want to do that. Avoid cash advances. Cash advances are always at a higher interest rate, and you immediately start paying interest on a card with a cash advance. And don't open a flurry of new accounts. So here are some warning signs that you have too much debt. If you're only making minimum payments, if you're at or near your limit on your cards, if you don't know how much you owe, if you use cash advances to pay other bills, don't borrow from Peter to pay Paul. And if you're being denied credit or denied purchases, or if you're getting calls from collection agencies. And here's my biggest one. If you lie to your spouse or your family about what you're spending, you've got too much debt. Don't hide those pants you bought last week in the closet. You have too much debt. If you find that too much of your income is going to your debts and you can't afford to live, you have too much debt.